right, now can y'all hear me? Can y'all hear me now? Still nothing? All right, now you can hear me? All right, what if, can anybody hear me? All right, perfect. There we go. Sorry about that. I was trying to be high tech and messed around. It was messing some things up. But, yep, such is life. All right, we got action. All right. As you see right there from the notes down there, I'm here in Georgia. I'm out here looking at properties and things of that nature. Uh, we got a lot to go with, but you know I got my notes. We got the weekly wrap up. Now we're seeing people join in so we can get started. Sorry about the technical difficulties early. I've been trying to look for a good Wi-Fi spot somewhere around this hotel, and this is the best place I could find. All right, I know y'all see by the thumbnail, you think that I'm about to tell you all these great things that Trump did this week. I mean, he did some things this week. I'm not gonna lie about that. He did some things this week, but is it great for you or not? That's the question. I always say that the stock market and the real economy are not one and the same. They are two different animals. If you've seen the stock market percent down from the highs, and then now we've rallied back and we're on the highs right now. But for you and the everyday person, your wallets don't feel any different. It's because the stock market and the real economy is different. I mean, of course, you've seen headlines out there. We got a deal, or United States or Trump got a deal with China, or they have the frameworks of a deal, and then they cut the tariffs down to 30% from the 145 that they was at. Sounds good, but in reality, again, it's not good for your pockets. Because the reason why I'm saying that is because Kroger, Walmart, they done came out and said that even though the tariffs been cut, prices are still going higher. And, you know, they're blaming it on different dynamics of supply chain and all this, but the prices are still going higher. Kroger said this, Target said this, Walmart said this. So that, nuance of it, and understand that it's a 30 to 90 day backlog on stuff. So the stuff that's already came into port from China got the 145 tariff, and companies already slowed down on what they was bringing into the country. So now that the tariffs have been cut, it's still another 45-day backlog to get it from China here to the States. And then that backlog is going to cause retailers, especially like Walmart, to raise prices to suffer from that first 145 they got in that last shipment that they just got last week. So the retailers have said prices are going up. With that, they always talk about America first. America first. It's all about getting jobs back to America. And then you hear in the, recently in the last, day or so that the United States signed off with a lot of deals with Saudi Arabia. But those deals, hey Blaze, how's it going? But those deals is not bringing real jobs back to the United States. It's just not. I mean, they're going to champion it on financial news. They're going to champion it on Fox. But the true reality is Nissan just said that they're cutting 1,000 jobs. Chegg, that's the online helper for college students. They just said they're cutting 22% of the workforce. That's this week, they said that. Walgreens and everybody, we go to college and you think being a pharmacist, that's a good paying job. Walgreens just came out and announced that they're about to automate job at get to do the things that they supposed to do. Will help alleviate them from doing mundane tasks or repeated jobs. But in reality, it's cutting down the number of pharmacy techs or people that work in the pharmacy at Walgreens. Because remember, when you start talking about automation and things like that, yes, it costs the company to implement these different tools and nuances. It may cost them more than a year's salary of an employee. But the thing, after they create it, they don't have to pay 401k. They don't have to pay HSA. They don't have to pay medical leave. And then these automations can go 24 hours a day. So that's what's going on in the automation space. And you know, I'm talking about automation for 3 and 4 years, way before it got to Main Street and people start talking about it, and they bringing up AI. AI is not going to take most of these jobs. It's going to be automation. So understand that's what's going on there. We talked about that. Another thing that happened this week, Trump signed an executive order to cut drug prices, U.S. drug prices, to match the lowest country in the world. For the people that don't know, the United States pay 4 to 5 times for drugs than every other country. So this quote unquote executive order is for the United States government, not you as a person to pay less, your insurance company to pay less, but Medicaid, Medicare to pay the same on par with other countries that's receiving that heavy discount. Now, will this all go through? I doubt it. Because of all the bureaucracy in Washington and things like that, I believe that they will come out and say, well, it just get tied up in court. Let's just say that. It'll get tied up in court for so long. Trump will be out of office before it get reconciled, and it will stay with the old plan that we've been on this whole time. What else going on? Now, with the tariffs and with China and then them signing that deal with China to bring back down the tariffs to 30%, these are the companies that's going to benefit from it. Nike is one, because for people that don't know, Nike, most of their production is in China. Nike will benefit from this quote-unquote deal, or this 90-day delay that the United States have with China while they work out the framework for another deal for tariff. Amazon will benefit because a lot of the products that you buy every single day come from China. And then, of course, the Trump administration closed the loophole for just single packages not receiving tariffs. They made every package receive tariffs. So Amazon will benefit from it. And then, of course, you know, you got Temu and all that. Those companies will benefit from it. I mean, the prices will still be higher because you're still going to have the 20% tariff, but you won't have that 145, so you're not paying double the price for something. Five Below, for you Five Below people that go out there. Alibaba, all these people that do a lot of manufacturing and work in China, those are the companies that will benefit from this delay. You will see consumers, because they don't know, because of course with Trump, you never know. One weekend is good, next weekend it change. So you're gonna see a lot of consumers, you know, front loading and trying to get a lot of inventory here into the United States before Trump changes his mind again. So be prepared for that. And then for everybody that's watching the channel, just ask your questions or put your comments in there, and then I'll get it to the end after I go through this weekly wrap up. With the tariffs, before this China deal came out, the United States budget had a surplus. This is the first surplus we didn't had on a month basis in many years, but we had a budget surplus in the United States of $258 billion for the month of April. They received, for the month of April, they received $500 million a day in tariffs. $500 million a day in tariffs. So budget surplus, that's good there. Another thing that came out, like I tell you, people get rich during recessions. People get rich when prices are depressed. And I know most people weren't paying attention, but Foot Locker, that's like a national name, and I mean a treasured name in the United States. But Foot Locker, it just got bought out by Dick's Sporting Goods 2 days ago. So now you know Foot Locker is owned by Dick's. That deal will be completed probably in Q3 of this year, but just wanted to point that out there. But with all that, that's really what's been going on this week. You know, you're hearing a lot of hoopla coming out of China with Trump doing a deal with China. You've been hearing a whole lot of hoopla of Trump doing deals in Saudi Arabia. You've seen the stocks like SMCI has been going up parabolic because of that. You've seen a lot of AI stocks going up because of that. You see Saudi Arabia talking a lot about investing in America. Yeah, that's good for the companies, but that's not good for you as the person, because most of those jobs are that they're creating or they're investing in the United States. They're not going to bring a lot of sustainable jobs to the United States. Now, construction-wise, building these, you know, 1-2 year job boosts, mostly AI and things like that. The long-term job growth in the United States are not coming from these investments. So that's why I always stress that the stock market and the real market is not the same thing. The stock market can be high as it want to, but everybody see the everyday person, their paychecks are not getting bigger. So that's something to think about and look at. With that, I'm not going to keep y'all for a long time today. Like I said, I'm out here in Georgia, so we can talk about real estate. I'm out here in Georgia looking at deals, and I got a two-pronged approach going on. Of course, I've seen deals of stuff that I like. I've also came here to do another thing. I've seen the things that I like, and I plan on giving disrespectful offers. Disrespectful offers is, of course, 20-25% below the asking price that they're going for. Now, if I get lucky and somebody say, yeah, I want it, then I'm gonna go for it. But again, I'm getting my name out there, getting my face out there, having communications, having talks with people, and then season will I don't believe that's going to happen. And then y'all know my time of year to buy properties is usually September to March timeframe. Why September to March? Is because most kids are in school. They're in their school districts. Parents don't like to move because they don't want to change the school district their ways and things like that. So the houses that's still on the market, those sellers either got to take their house off the market or they got to take lesser pricing. So my plan here is I'm getting my eye on inventory that I like, areas of the city that I like. And then I'm going to keep my eye on it, take note on it, talk to the seller, talk to their agent, excuse me. And then I'm gonna present an offer. Am I expecting them to accept my offer? Hell no. But I'm expecting them to accept my offer if that property is still on the market in September. And that's why I'm looking at a plethora. I'm looking at over 45 while I'm here. Because will some get bought? Yeah. But will all get bought? No. And that's the reason why I'm here. But with that, let's get the questions. See if we got any questions in the comment section. Of course, I'm over here trying to work it on two sides here with a laptop and a cell phone. So please comment in the comment section. All right, I'm seeing comments in here that's saying something about I'm having two conversations, background conversations. All right, Berto, I see what you said. If you're looking at 45 properties, how do you set up, or are you using a realtor? All right, no, I am not. Well, I'm using their realtor. I'm using the seller realtor. I don't hire a realtor to look for me because I believe that I can get more work done just talking to the seller's realtor. I mean, I don't like the game, the telephone game. I say something, I say it to my realtor, then the realtor get to talk to another realtor, then that realtor get to talk to the seller, and then I'm just trying to eliminate the calls. I'm just trying to eliminate the calls there and try to eliminate the number of people that I have to deal with to get to the seller. So what I did was I reached out to different selling agents that had portfolios and things that they had going on, and I'm just talking directly to them, showing up at these properties and checking them out like that. I'm not using an agent at all. I rather just, like I said, be one step closer to the conversation than one step back from it. Anybody else out there? Oh, this looks like it's gonna be quick. It's not a lot of questions this week. Let's see what else is going on there in the news while we wait for more questions. We have, and like I was telling y'all, Walmart and Walgreens and Target and all of them said that they're going to increase prices. President Trump just came out asking those companies to eat the tariff. And could the companies eat the tariff? Yes. The companies can eat the tariff so the prices do not go up on consumers. But again, they're publicly traded companies. So when you're a publicly traded company, your shareholders want to see you increase revenue. They want to see you increase profits quarter over quarter, year over year. With them eating the tariff, their margins will be crushed. Their revenue, the revenue will go up, but their profit margin will go down. So that's something that Walmart has to deal with. But that's really what Trump is asking them to do, is sit there and take it on a shareholder basis, so the consumers can not have to pay higher prices. What other states, Levita asks, what other states are good to look at? Well, I think you're talking about real estate. For me, I like landlord-friendly states. Landlord-friendly states. I mean, I don't want to make it sound political. There go my paper flying. But I don't want to make it sound political. But you more Republican-led states. I'm just being honest. I mean, you don't want to be in a a tenant-friendly state, and then you sitting here, you got tenants sitting in properties for 6, 8, 12 months. Hell, there's still people in California right now that still can't get evicted because of the COVID moratorium. That's 4 years ago. So you as a landlord, you got to look at what's best for you. And you got to put on two different hats. You got to, you as a person, as a consumer, you got to have a one hat. But when you turn to a landlord, you got to look at what's best for you and what you're trying to do. What you're trying to do as a landlord is you're trying to get somebody in a property that's going to pay. If they can't pay, you want to get them out as expeditiously as possible so you can put somebody else in. So that's the real thing to look at. But I'm looking, when I talk about landlord-friendly states, I'm talking about not Illinois, the Chicago area. I'm not talking about that. I'm talking about the Kentucky. I'm talking about the Georgia. I'm talking about, and I'm saying, when I say Georgia, I'm really not talking about that Atlanta area either. But Georgia, Florida, some parts of Alabama, and you can go up and down the Bible Belt, South Carolina and things like that. Those places is more landlord friendly than, the Northeast. You got rent control in New York, and they starting to do rent control in California, the Connecticut's, all that stuff in the upper Northeast side is very bad when you're trying to be a landlord, because of course you still got to pay a mortgage no matter what. Even if the tenant pay or not, you still got to pay a mortgage. So I want to be in places where it's easier for me to get my rent than it's harder for me to get my rent. And then of course, with me buying an asset, I want to set the price. I don't want to be in places where it's rent controlled, where somebody else is setting the price for me. Because of course, everybody buy properties at different prices and different rates, and they need a different price point for their rent to be, so it'll be capped. You want to pace your own standard and make sure you get the money in your pocket so you can take care of all the obligations that you have. What else we got out there? Sorry, working on both sides. Why do I wait till September? That's a good question, Jay. Give me 1 second. Let me grab my paper before I litter up the place. Okay, so the reason why I wait till September, because, of course, spring buying season usually starts at the end of March. It goes to April, May, June, July, August. That is usually the highest demand time. So, of course, with the supply-demand curve, more demand, prices go higher. That's usually when kids are getting out of school. You start looking at properties in May, you won't move until June, so that's after the kids are out of school. And then so that is the most time, it's freed up time, and it gives parents time to reallocate, and move situations around. It just happened to be between April and September. When September comes, that's when, all the kids are back in school, parents are not trying to change that dynamic, and they just run with it. So that's why me as an investor, I want to be on the opposite side of that. I want to be when there's not a lot of demand. Like when they brought up that most of the people, because of the high interest rates, most of the people have grown weary of the housing market and they don't want no part of the housing market. I got excited. That just meant less competition. And then so that's the same thing with me looking from September to March when I'm looking to buy, because it's way less demand and I get to get more flexibilities with the seller, and I can give more disrespectful offers that will get accepted. So that's why I choose that time of the year. Berto, did you hear about the 100% bonus depreciation is back? What's your thoughts? I did hear about the 100% bonus depreciation. They're trying to put it in that tax bill. That will be a benefit to investors, especially on the commercial side. Right now, the Fed sees it, the government sees it. A lot of these big multifamily projects, a lot of the ones that started during COVID, and most of these people didn't know what the hell they was doing, they're in a bad place. In 2024, when it was time to refi all those commercial loans, the bank said we just gonna extend it for a year and hope 2025 will fix it. 2025 didn't fix it. but the bonus depreciation will let people get out of properties at a loss, or they can buy a property and then bonus depreciate to get their money back out of it 100%. So I think that will be a good thing for investors, especially on the bigger projects, because then you have more money to extract out of those properties. And I think that will help the commercial real estate market a lot, because a lot of, even on the commercial side, a lot of big time investors, unless they're getting a stupid crazy deal, they're not just going to jump on properties at this moment. What we got? For someone new to investing, do I recommend real estate over stocks? All right, so I'll just put it this way. You get more bang from your buck from real estate, but you have to do more work in real estate. You get more bang for your buck because let's just say you buy $100,000 property. Let's say you put $25,000 down on a house. $25,000 down, you're getting $1,100-1,200 a month in rent. Let's say that cash flows $300-400 a month. Let's just say that. So you use that same $25,000 and then you put it in the stock market. Let's say the house goes up, the value of the house, you hold it for 5 years, it goes up, let's say 20%. Let's say the value of the house goes up, let's say $150, $150,000 now. You can sell that with only 25 in, and then you get let's just say $25,000 on the upside, you're 25,000 back, so that's 100% return. In the stock market, to see something go up 100%, I know recently we've been seeing, you got the meme stocks and stuff going on out there that's been going up, but for the large part, that's not how it happens. Usually that's a 7-8, year avenue before you can just, and of course, most people that's new to the stock market, they're not gonna put all 25,000 on one stock. They're gonna spread it out. So it's gonna take a way longer time to get that 100% return than in real estate. But you have to do more work. What else we got out there? Do you know if any benefits for veterans and home buying? I know VA loan, but any other benefits? Well, for veterans, it depends on if you have your 100%, disability. In some states, not all, but in some states, you don't have to pay property taxes, especially if you're 100% disabled. That's a huge benefit there, because the property taxes, especially in places like Texas, Florida, Nebraska, and things like that, that's a big line item in the housing market, especially on the mortgage statement. So those things are good. Sorry for it was some people yelling over there. Sorry about that. What else we got? I see Anna. If you have to move to a different state due to work, how do I determine if I should list or sell or rent out my home? What are the big things I should consider? That's a great question. That's a great question. All right, for me, if the price of the home is, so I'll just say it like this. If let's say my cost is $200,000 to run this property, and then for me to have a good return, I need rent at $3,000, $3,200. Then I scan the local economy and see if it's jobs that's paying $6,000 to $8,000 a month. Because of course, whatever the rent is, you have to have 3 times that income to even rent it. So now if I'm living in a McMansion or something that's, $700,000-800,000, and let's just say a one family house, and then somebody needs to pay $7,000, $8,000 a month, I'm not going to rent it, because it's just, the market is too small for that. And then let's say that person moves out, it's going to take me a long time to find somebody else to rent it again. So when I'm looking on a sale, it depends on that, and then the return that I want, rents that I want, and then I see if that local economy by a large margin can't support that rent. I don't want the ones and twos. I need a large amount, because if you in real estate longer than a day, tenants are going to move out. You're going to have issues. Tenants are going to, especially if you're in like a military town, tenants get orders, PCS, then they're gone. So you got to have a big supply pool that will keep renting that at the price that you want. And if you don't, then you're going to be in a crappy situation. That's how I look at that. So those are a couple dynamics I look at to see if a house that I live in, should I turn it into a rental. But you see a lot of people, especially military, they don't put a lot down on their property, and then their mortgage payments are so high to maintain the house that once you add the rent to it, then the rent gets astronomical. And then sometimes it's just better to sell and then use the money to go buy rentals and probably the next location. Those are the things that I look at when I try to figure out, should I sell, rent the property, or what have you. I hope I answered all your questions there. Of course, the signal here is a little shoddy, so I don't know if the everything is going through. But all right, thanks, Anna, on that. All right, is there any other questions out there? Because I ain't gonna lie, it's getting hot. We got somebody. This is Ronnie. Do you have any problems with state rentals? Oh, that's a great question. Yeah, I have problems. I wish I could sit here and tell everybody that, yeah, you get some out-of-state rentals, don't worry about it, everything's gonna be fine. Problems that I have, I do have a tenant right now here in Georgia, not in this city, in another city. He just informed the management that he's moving out at the end of this month. He didn't. Usually I try to find out 2 or 3 months before if somebody's going to renew or not, to give me lead time to make sure I got all the things lined up to turn the unit, to get the property managers out to advertise the unit. So when that person is moving out, I get the team in there, clean it up, fix it up, or whatever that needs to be done, and then the new tenant moves in. So those things do happen. I've had issues here and there. I mean, of course, hurricane season came. I had tenants that was, and actually in the city I'm in right now, trees fell all around the property, and trees fell down all in the street. So FEMA or nobody can even get to the tenants. Windows was broken out, the whole nine. So I've had that. So the same stuff you grew up listening to, you know, maybe family and friends and things that they did to screw over a landlord, that stuff still happens today, but I'm just on the other side of it. So yeah, you do have issues, but that's the same issues you would have if you was a landlord in a property. You still laws that you have to follow to stay within the framework of what you're doing. You can't just, because you actually technically bought the house, but as long as you give them a lease, it's their house. So you still gotta pay attention to the laws and the rules that's in the area, especially when it comes to being a landlord. So, but yeah, there are problems away as it is. But that was a good question. Everyone's out there. Oh yeah, just a couple programming notes. I know some people was probably looking at Wednesday and wondering why a YouTube video wasn't out there. I'm trying to change it up a little bit. I'm gonna switch my I'm gonna switch my dates that I put out the long form videos to the weekend, and then maybe like one on Wednesday and then one on the weekend instead of the Monday Wednesday deal that I was doing, or Monday Thursday deal that I was doing. So the videos are still coming. If you've seen last night, video came out talking about how Dave Ramsey don't work for everybody. It just depends on what your goals are. But it's a good video to watch. Please tune in and look at that video. It was posted yesterday, well, last night about 10 o'clock. So please check that out. But yeah, but to Ron, to your question, again, being a landlord is not just all sunshine and rainbows, especially depending on how you do it. You know, a lot of people, when they get their first rental property, they want to manage it themselves. They want to, you know, go in there and turn the nuts, bolts, screws, change the carpet, do the plumbing. I'm not gonna lie, that's a harder avenue to go at. But on your first rental, I think everybody should do it so they understand what property managers have to go through on a day-to-day basis. But after that, if you want to grow a big portfolio, I say you should leverage that off, pass that off to somebody else to deal with the day-to-day operations, so you can focus on growing the portfolio and not dealing with the day-to-day stuff. Because trust me, the phone will never stop ringing when you managing properties by yourself. To bypass some issues with tenants, what are some of the things you do or look for in picking tenants? Or do you let the property managers figure that out? Me, I set the standard with the property managers. The property managers, and this is how I do it. And it's the same as if you manage the property yourself. You want a certain level of credit score. You don't want somebody with a 2-digit credit score written from you. If they didn't pay other people, they damn sure ain't gonna pay you. I mean, I know it's like you should think, well, they need a place to live, so they gonna pay. Well, no, people pay for their wants before they pay for their needs. So remember that. I think somebody sent me a post that was funny. They said people use their paycheck to pay for their wants, and then they want to borrow my money to pay for their needs. I love that one, because that's exactly what people do. People notice every time somebody come to borrow money from you, it's always a sob story about something they need, but you notice people don't ever come to you and be like, hey, let me borrow $1,000 so I can go on this trip to Cancun this weekend. Because you'll be like, hell no. But so they'll take their paycheck, go to Cancun, and come back and be like, oh man, I'm about to get evicted. I need $1,000 to pay the rent. That's what happens. So, but the thing is when it comes to being a landlord in general, you want to have a certain standard. So 650, 700 credit score. Even with the credit score, I mean, loans, if that's the big drag on their credit score, I'm not hell bent on that, because I know some people went to school, their parents talked them into getting student loans, and then they didn't finish school. I'm not hell bent on that, but I'm still looking at if they have a lot of consumer debt, if they have credit cards maxed out, if they sitting here not paying, if they got any delinquencies on all that other stuff. Because if they not paying these people, who's going to really severely affect their credit score. And then once they in my property, I know it's going to be another 3 months. If they don't pay, it's going to be hard to get them out. So you got to have a higher standard than that. So I try to look for people with the upper echelon credit scores. I look for people that have 3 times the rent. So if the rent is $1,000, you at least need to be making $3,000 a month. If the rent is $2,000, you need to at least be making $6,000 a month. So I already know they're going to do food stuff with the money, but maybe, with the other third of the money, they keep paying the rent. So those are just different dynamics and things that I look at when I'm doing that. But for me, I talk to the property managers and set those standards, and then the property managers just push out the standard to the tenants when they go on the screen vet to look at them. I do look at background checks. I mean, I don't care about a little marijuana here or there, but I do want to see if somebody been squatting, see how many evictions and stuff that's on people's record, because if they did it once, it's highly likely they'll do it again. So that's the things that I look for. Do you know flipping? And there's nothing wrong with flipping. I don't know what's going on with the IT here. I see somebody saying different voices. But flipping, there's nothing wrong with flipping. Me, I love the tax benefits of just buy and hold renting. I don't want to deal with the nuances of, dealing with a whole bunch of contracting crews to do this, to exit this, and then I got to stay on top of the cycle of the market. That's just why I don't talk about flipping. But if flipping is your thing, nothing wrong with it. As long as you're making money, that's the only thing that matters. But the tax benefits come from buying and holding. Most people who start out flipping, their ultimate goal is to be a buy and hold investor, because that is the most tax benefits that you receive. And when I say tax benefits, I'm not just talking about, okay, you get a $2,000 refund check. I'm talking about you can make millions of dollars and not pay a penny in taxes. That's what I mean by that. I don't know different voices, seeing that you're hearing. Again, I'm here using hotel Wi-Fi, because y'all know I'm too cheap to buy a bigger data plan, and that's what I'm stuck with. So if there's not any more questions out there, I'm gonna have to, once this video is over with, I'm gonna have to play it back and listen to all the stuff that y'all are hearing. But again, apologize for the technical difficulties, but I'm about to get back out of here. I'll leave in about another 20 minutes or so and go back out and looking at properties. It's been an all-day thing. Oh, now I see what you're saying. All right, but for anybody else out there, if y'all don't have any questions, y'all have a good one. We'll see you next week, and please check out the videos that was just posted this last night, actually. Y'all have a good one. See you next time. Thanks for coming into the live and looking at the process.